$5. That's what most people think is insignificant. $5 for coffee every morning. It's just $5, you say. But that $5 coffee, every single day for a year, that's $1,825 gone. Now let's add compound interest. If you invested that money instead, at a modest 10% annual return, in 30 years, that daily coffee becomes $339,000. $339,000 from $5 coffees. That's compound interest, and that's what most people don't understand. Warren Buffett calls compound interest the eighth wonder of the world, but most people don't start investing until they're 40, 50, sometimes never. They think they need a lot of money to begin. They think it's complicated. They think it's risky. So they do nothing. And nothing compounds into exactly that. Nothing. The secret to wealth isn't making a lot of money. It's starting early and being consistent. Even small amounts, invested consistently over time, become life-changing wealth. A 25-year-old who invests $200 a month until retirement will have more money than a 40-year-old who invests $1,000 a month. Why? Time. Compound interest needs time. Think about it like planting a tree. The best time to plant was 20 years ago. The second best time is today. Every day you wait is a day you lose. Every month you postpone is money you'll never recover. Because you can't buy time. Most people have this backwards. They think they'll invest later when they have more money, when they get that promotion, when they pay off that debt. But life never gets easier. There's always an excuse, always another expense. And before you know it, you're 50 with nothing saved. Here's what smart investors do. They pay themselves first. Before rent, before groceries, before anything else. They set up automatic transfers on payday. Money goes straight from checking to investment accounts. They never see it. They never miss it. And it grows silently in the background. The power of dollar-cost averaging changes everything. Instead of trying to time the market, you invest the same amount every month, regardless of whether the market is up or down. When prices are high, you buy fewer shares. When prices are low, you buy more. Over time, this averages out, and you benefit from both market growth and dips. Most people panic when the market drops. They sell at the bottom because they're scared. Then they buy back in when prices recover, guaranteeing losses. Smart investors do the opposite. They keep investing through downturns, market crashes or sales. Everything you wanted to buy is now cheaper. Index funds are the secret weapon of smart investors, not individual stocks, not day trading, not crypto gambling. Boring, simple, low-cost index funds that track the entire market. Warren Buffett recommends them. Every financial expert recommends them because they work. Over time, they consistently return 8 to 10% annually. You don't need to beat the market. You just need to match it. Because matching the market over 30 years makes you rich. 90% of professional fund managers can't beat index funds over the long term. What makes you think you can? The 3-fund portfolio is all you need. A total stock market index fund, a total international stock market fund, a total bond market fund. Adjust the percentages based on your age and risk tolerance. That's it. This strategy has created more millionaires than any other. But here's the catch. It's boring. There's no excitement, no thrill of picking stocks, no gambling on meme stocks, just steady, predictable growth over decades. And most people can't handle boring. They want action. They want to get rich quick. So they gamble, and they lose. Getting rich quick is a fantasy. Getting rich slowly is a guarantee if you're disciplined. $100 a month starting at age 25 becomes over $300,000 by retirement. $300 a month becomes nearly $1 million. $500 a month becomes $1.6 million. This is simple math using historical market returns. So where do you start? Today. Right now. Open a retirement account. Set up automatic monthly contributions. Choose low-cost index funds. Then forget about it. Don't check it every day. Don't panic during downturns. Just keep contributing. Let time and compound interest do their magic. The biggest mistake isn't picking the wrong investments. It's not investing at all. Paralysis by analysis keeps people broke. They research endlessly. They wait for the perfect moment. Meanwhile, years pass. Money sits in checking accounts, earning nothing. Perfect is the enemy of good. You need a good strategy started today. Start small if you have to. $10 a month is better than zero, because $10 compounds into something. Zero compounds into nothing. 30 years from now, you'll either have financial freedom or you'll be working because you have to. The difference is the decisions you make today. Small decisions, daily decisions. The decision to skip that unnecessary purchase and invest instead. Wealth isn't about luck. It isn't about inheritance. Wealth is about what you do with whatever money you have. It's about living below your means and investing the difference. Every dollar is a seed that can grow into a tree if you plant it. So plant it. Start investing. Start small. Start now. Your future self is counting on you.